So yeah, cool. Well, everyone, thanks for jumping on. Feel free to, drop, something in the chat about yourself. That way, kind of know who's on here. I believe at the first meeting we had, it was all about technical analysis, and how to basically read stock charts. Okay. So I've gotten pretty good at that within the past recent years. So that was our first meetup. Our meetup group is real estate, stocks, and crypto. We will definitely get to the crypto eventually. I do know a good amount about it. There's definitely a really good investment space there for the future. Of course, it is just tech. Those are just software companies. That is what crypto is. If you invest in the NASDAQ, you can be invested in crypto as well. So, but that's a whole other topic for another day. We'll definitely get into that. But first thing I wanted to kind of start off with is what I've got pulled up here. So what we're looking at is we're looking at the interest rates. Okay, so everyone is really freaking out in financial markets, real estate markets, all about interest rates, right? The Fed is tightening, the Fed is hiking interest rates. That's what's going on. So what I want to show you is you can actually be one step ahead and kind of predict what the Fed is going to do. Okay, so I'm going to turn off this turquoise line here. We'll talk about what that is in a minute, but this is the interest rates. Okay, this is the 2-year Treasury bond. And again, if you guys want to go on TradingView, I've got multiple videos on my YouTube talking about how to do this stuff. But this is what's going on, right? So in, coming into COVID, interest rates were just slammed down, right? December to January to February to March, slammed down. That's what boosted the markets as far as stocks, real estate, all this good stuff, right? Nice cheap loans to go buy cars, all that good stuff. Now they have flipped the complete opposite direction, and they're actually a lot higher than they were back in, previous to COVID, and this previous peak at 2018. Okay. So most people think this is just the Federal Reserve doing this. Okay. So what we can do is overlay the Fed funds rate, which is what the Fed does, and we can see an uncanny correlation. I mean, just spot on. So the takeaway I want you guys to show or know from this is the Fed is not in control. Okay. The Fed just basically follows what the market is telling them to do, or they just follow the market, I should say. So if you want to kind of know where things are going, look at the 2-year. Again, this is the chart right here. The Federal Reserve is the turquoise line. So you can see they've got a ways to go. They expect to hike here in the next week, and they will get pretty close to where we're at currently. So don't worry about what the Fed is doing, right? Quote unquote, you can already go see this for yourself. I can tell you right now, we're getting pretty close to the top, but there's definitely more pain ahead as far as markets go. So anyway, something I wanted to show, not a lot of people know this or even, talk about it. So I like showing it just because you can just see the correlation clear as day, right? So let's see some other stuff that I like showing. So here's some charts as far as the median monthly payments as far as real estate. So prices are all about affordability, right? I mean, people care about their monthly payment at the end of the day. At once upon a time, there was just a 15-year mortgage. Now we've got a 30-year mortgage, and that started back in, I think, the 50s. And then eventually we will go to a 40-year product. They're already doing that for some people that can't make their payments based on, COVID and everything that happened with that. So you can see there's a huge just rise, and that's all purely from the interest rates, right? So that's going to have downward pressure on real estate. That's why we're seeing some price drops. That's why we're seeing some of those things going on right now. Another chart I wanted to pull up here. Sorry, I had this ready a minute ago. Here we go. Okay. So this is another good thing to look at as well. So I came across this. I think Zillow produces this data, but basically this is the home value divided by the median income ratio, right? So again, it's all about, quote, the monthly payment. It's what people can afford. Okay, and you can see that obviously this has kind of been uptrending. If you want to draw an average line through here, it would kind of look like this rather than this yellow line that they're implying. I would draw it diagonally. But you can see here that the, value to the median income of America has gotten out of whack, right? So I don't see a crash coming, but we will. That's why we are seeing price drops. We're seeing downward pressure on the market. This is, quote, the top, right? So real estate, of course, you can't go wrong as long as you're holding it. You're going to do great. But it's just something to keep in mind. I'm really big on data. And I'll show you one more that I came across that's really good. This is on TradingView. So this is actually the monthly supply of houses in the United States. So this is national data. This isn't just local to Southern California. This is all national, but you can see, what it's all supply and demand, right? So if you got an influx of supply that hits the market like we did in 2008, prices are going to come down. So what's really interesting is this data point is shooting back up again. And that's because people are putting their houses up for sale. And, inventory has been kind of sitting. It's been kind of compounding because, sales around the nation maybe haven't been happening as easily as they, previously have been. So we're starting to see this inventory creep up. So it'll be interesting to, kind of see what happens. I don't think, people aren't desperate like they were in 2008. A lot of houses are paid off nowadays, with the boomer generation having their houses for so long, a lot of homes are paid off. So, but another cool thing to see, message me if you guys want to know where to find some of this data. I'll also try to post it as well after we're done here. So, but anyway, for any newcomers, be sure to drop in the chat, who you are, what you do, maybe what you're looking to get out of this and this group. I think the first group we had about probably 8 people. Looks like we've got about 13. We're going to keep growing that each time, I'm sure. And we will, the next couple meetings I want to do in person. So we'll bring a screen out and we will talk about, probably the next one will be on crypto. So we've done stocks, we've done the real estate, and we will do the crypto next and keep that going. But of course, it's going to be all about investments, the right way to position ourselves. You kind of always want to have a little bit of exposure to all these assets. Real estate for tax benefits, crypto because it is definitely a good emerging thing. And I can also show you guys how it does. Crypto is kind of like real estate a little bit in a way, how you can lend against it. There's a lot of platforms where you can borrow against your cryptocurrency, which is pretty cool. So anyway, I'm going to kind of tie in a lot of these topics all together as we go on in future events. So. But anyway, let's continue on here with what we came for, ADUs. So accessory dwelling units, a lot of people call these ADUs. You might hear some people call them DADUs or JADU. That's kind of some slang for some, shortened terms of what you may see there out in the market, but this just means detached. And this is actually a junior unit, which would be your third, which is pretty cool. So just a bit of background about me. I've been investing in real estate since 2016. That's when I bought my first house and was kind of immediately hooked. Was definitely inspired by a friend who's a full-time real estate investor who owns, he's a year older than me, and, I'm fairly young, and he owns 50 homes here in Southern California, and he does very, very well. So definitely inspired me to start investing, and kind of got me on my way. So anyway, accessory dwelling units. These are granny flats, back units, garage conversions. These are basically just supplemental housing that, oops, that didn't work out good. Okay, we're going to just stick on this view. So these are basically supplemental housing that California is definitely pushing, right? So we've done this urban sprawl throughout Southern California and definitely, other, large metro cities, and you can only go out so far, right? So eventually you need to get more dense, and that's what ADUs are doing. You're creating more density within these cities to provide more housing, okay? So the ADUs empower the current owners of existing properties to build a duplex or even a triplex or even a fourplex. There's definitely ways to build fourplexes with these lots. So granny flats, back units, garage conversions. It can be all those things. Again, attached or detached. Detached are considered, dad dues. Laws were first passed in 2016, and they've only been getting better. They've only been getting less and less restrictive since then, which is good. That's what California should be doing. If you want to, create housing supply, don't do rent control, loosen regulation, right? That's what they need to do, and that's what they are doing, which is good. Of course, it's kind of a, they are working the rent control kind of on both sides, so it's a bit of a dance, but that's what governments do. So here's my current project. So I am doing this on my property in Santa Ana. So you can see I'm doing a detached ADU. So I like doing it this way with the detached because now it's kind of a very, traditional duplex. So, which is pretty nice. One thing about these things, you do have to have a dedicated sewer run, kind of dedicated utilities all the way around. You can't be piggybacking off of utilities from the main house, meaning I can't just run a sewer line from here to here and tap into the sewer that's in here. Because if you ever had a backup here or any kind of problem with the plumbing, then you'd have a problem here. It's no bueno, right? So that's one thing that the cities make you do is have a completely different, system as far as utilities. So I'll be running the sewer right through here, cutting across and catching the main city connection right here. Same thing with the water. Water is going to run around this way, cruise over, gas line over this way. So this is right around 690 square feet. It's a 2-bed, 1-bath unit. So I'm actually going to live in this for probably about a year and a half, in which case I think that we will see a real estate bottom, probably next year, maybe early 24, and then I'll be looking to pick up another property here in Orange County. So, and do the exact same thing. So the permit process, it does take a little bit. So first you're going to go through planning. Planning is basically only going to just look at what you're looking at here, right? They're going to see, okay, what's your lot size? What's your existing coverage? Meaning how big is the existing house? Did you already do an expansion and you're covering like 75% of the lot, right? They don't like to see that. But they're going to say, okay, let's look at the boxes. Okay, we got the lot box, we got your house, they're just looking at that as far as planning. That's the first stage. So then you move on to the building side, and they look at more nitty-gritty stuff, more detailed stuff as far as the structural, architectural, code, related things as far as building, but it takes about 4 months. Some cities actually they're being really smart. Menifee is one of them. They have plans that are already like pre-canned, pre-designed that you can just pick up in the city and you can just copy paste it on your lot, which is awesome. So yeah, some cities are really being proactive about it, which is smart because it's only going to be more tax revenue for them, right? If you're allowing people to upgrade their properties faster, you're going to be able to charge more property tax, generate more tax revenue. It's definitely a good thing. So this one's in Santa Ana. It's taken us about 4 months. We're resubmitting, hopefully for the final time, and we should be done and getting a shovel in the ground. So, sorry guys, I see some of your comments popping up. I want to move on to the next slide. So this is the layout right here. So this little kind of finger sticking out, I kind of got rid of this. So this little part isn't here, but this is the kitchen right here, stove, refrigerator, kind of reworked this a little bit too. I didn't want the fridge here, so kind of just stretches at like an L right here. So this would be the kitchen, living room, bedroom, bathroom, washer, dryer, and bedroom here. So for me and my partner, for living meagerly and keeping my money invested like I like to do, this works out. And then we will, of course, upgrade from there once again, market bottom kind of hits in real estate. And I will also show you guys how to catch bottoms and predict the real estate market. Okay, you can definitely do that through the bond market, which is really cool. Going back to what we were looking at, that's part of the bond market. So this is a really good, efficient floor plan. So you got everything. you really need. It's, its own unit, washer, dryer, and unit, all that good stuff. So here's just kind of some sample projects that I've pulled from my contractor's Instagram. So some of the stuff that he's done. So, you're gonna go in, grade the thing, trench for plumbing, trench for all your foundations, do all the underground, get it all, inspected, tested out, pour your concrete with your rebar, of course, all that good stuff. Frame it up, get your roof joists in. One thing about the roof joist is you can go quotes traditional. That's where they just kind of stick frame them in place, or you could get pre-engineered trusses. So I definitely would recommend talking with your contractor about that. Your architect that'll affect how your architect designs your building. So it's definitely beneficial in a lot of ways to, approach a GC first and have them reach out to an architect that they work with a lot, because they'll kind of design it the way that they like building it. So that's what I do in my day job. I do commercial construction, and I can't tell you, architects don't know anything about costs. Like they just don't know, right? They just don't do it because they're not on the receiving end, or they're not pricing things every day, right? They're more worried about getting things drawn up. So, then you're going to get sheathed in. Then you're going to do all your MEP. You're going to rough in plumbing, electrical, all that good stuff. Get your stucco done, get your roof done, doors, windows, etc. Right? So it's kind of generally how the process goes. I'm going to skip this YouTube link right here. But here's just kind of some sample floor plans. And again, with my contractor's permission, this is kind of some of the pre-canned designs that he uses. So, these are all, pretty this is kind of generic housing, right? Like we're not doing like a 5-bed, 3-bath ADU. We're not doing, basically like a second house. We kind of are. It's like a second apartment, really. But we're kind of going for run-of-the-mill standard housing. And depending on what your lot has, I mean, you can fit a pretty good sized place. I've definitely seen some places here in Southern California that basically do a house that's just as big as the existing structure. So you do have to check with the city, though. A lot of times they do want it to be smaller than the main house. They want it to kind of look right, and be more of kind of like, that guest home type of look. So this is kind of like a studio right here on this left side. This would be an example of a 1-bed, and this would be an example of a 2-bed over here on the right-hand side. This is actually exactly what mine looks like as far as the kitchen layout and stuff like that. So, okay. So what's pretty cool is when you submit to the cities, they basically put you on an expedited permit schedule. So typically they would take a lot longer to do these things if it was a regular house. But because, again, California is, trying to drive supply, right? Because we are in a shortage of housing, they are doing these things. So you normally have to pay an extra fee to get expedited permitting, but it comes free of charge, which is really awesome. Impact fees. So that's kind of just general extra fees that the cities will, tack on to certain building projects when you're above a certain threshold. But for anything under 750 square feet, that's kind of why I did mine at the magical number of 700. You don't have to do extra fees. So, and for what I needed for that floor plan, I didn't really need the extra 50 feet. So junior ADUs, so you can do a small third unit now. A lot of times the easiest way to do that is to convert the garage. If you don't want to convert the garage, you can rework the existing floor plan of the existing house or add on to the existing house. It typically has to be a part of the existing house. So that's something to take a look at. Some people will actually do an ADU, build a garage, and then get the ADU done, get the garage done, walk away, come back to the city, do a garage conversion on that garage they just built. And if you ran, a washer dryer connection to it, you got electrical, you've got everything you need right there. Okay, I want to go to some of these comments you guys have. So, all right, Okay, how long it take you to get your permit? So yeah, about 4 months. Again, that's going to vary by the city. Even if you do an ADU out of a garage, yes, if you do an ADU out of a garage, you do have to separate the plumbing. So you will have to rework it if it's running to the existing house. So again, you wouldn't want to, have the main house back up, because then you go to flush the toilet in the ADU and it's not going to go through. So they do that kind of out of, safety/health concerns. So I think it is a good thing. Yeah, well, you still need an architect. So this is Marif. We did not know about the pre-planned design, and we already paid for the architect. You're still going to need the architect, and I'll tell you what, running down to the city and submitting and filling out forms, it's definitely a pain. Oof, but it's been 1 year and 2 months since we submitted. Yeah, it can take a long time. But unfortunately, that's very exorbitant. It definitely should not be taking that long. It could be taking that long in LA though. LA is notorious. So, and there we go. I'm sorry. Reading your comments here, it is Los Angeles. Yes, that does not surprise me. So, LA is notorious for being really, really long with permits. Okay, so Peggy asks, how does an ADU affect the valuation of the main property? Have you seen a negative impact? Absolutely not. It's always going to boost your value. So I mean, you're essentially, so where I'm at in Santa Ana here, properties go for, oh man, let's see, what's kind of like the average square foot cost? Yeah, so generally they're going for, about $600 a square foot as far as valuations. You're building for currently right now about 225. That's kind of all in. That's like city fees, permit fees, your design fees, all that stuff. So you're never going to have a negative impact on your value. If you're doing a garage conversion, let's say, you are losing utility with the garage, but when you go to sell that property, it's probably you're gonna investors are going to look a lot more at it, right? So you're kind of appealing to a different type of buyer, and you definitely may have some regular buyers that want to get income on a second unit, maybe through Airbnb or a long-term tenant. A lot of people say, well, I don't want someone on my property. Oh, just throw a fence up. I mean, throw a fence up and kind of separate the yards. So that's the way I kind of look at it. I'd rather have the assets and also provide housing for the market, right? You're doing something good for the community. So that's why rents are high, is because we don't have supply. So more landlords, more supply. It's a win-win for everybody. Can you build a second floor to a garage and make the an ADU? Yep, absolutely. You most certainly can. You'll have to get an engineer, put in some beams, make sure it can support the load. Maybe have to do something to the existing, walls, possibly put in like a column in the center of the garage. So you have to get with an engineer. And I can't stress enough, definitely talk to people who have done this stuff. If you talk to architects who have never done an ADU, or they only do like ground up homes, I mean, you're going to get some crazy answers, or they won't think you could do it. I still talk to this day residential architects who don't even know about ADUs at all. They don't have a clue. So you definitely want to make sure you're getting someone reputable who's done this stuff, and knows the laws. So prefab ADUs, there are prefab ADUs, but really you don't, they're still really expensive. Since they're kind of new and kind of startup, they really haven't caught on as far as, getting a lot of sales and driving down the prices, unfortunately. So, in Santa Ana, my city, they make you match the existing house. So that kind of throws the whole idea of prefab out the window. Because prefab is you're making the same parts, the same house, but it's back to custom after that. So, okay, so I'm gonna come back to Vadim's question after I go through some more of the slides here. Um, okay, so yeah, no more maximum or minimum ADU size. So this does apply to some cities. I think some cities have pushed back on the max and min. Um, so you can go, like I'm also looking at doing another one in Redlands currently. you can go straight to the city's website, and they pretty much all have an ADU checklist now. And it'll tell you all the different requirements as far as lot coverage. You know, if you've got a 10,000 square foot lot and you got a 2,000 square foot main and you want to do a 1,000 square foot ADU, does that reach this certain threshold of lot coverage? So they have different rules like that. So they're all kind of the same. It's just, you know, at what limits each city does it. So, but at the end of the day, they have to, you know, California passed a law. These cities have to abide by it. And for a little while, you know, the early years, some cities were pushing back just because they just weren't privy and had no motivation to help people out, right? So, okay, so another cool thing too is you no longer need to be an owner applicant. So for a long time, you had to be living at the property to do an ADU. That's not the case anymore. And you definitely need solar. So you have to do solar panels with 100% offset. So that means if you use, you know, if your bill's 150 a month, you know, at whatever kilowatts, it's got to be generating that exact amount. So, which is pretty easy. There's a lot of solar companies nowadays where you buy the panels, you finance them for 20 years, you take a loan out at 2%, and your bill's way cheaper than the power company. You're locking in a price, it'll never climb. And also, guess what? When you're borrowing at 2% and inflation's up at like 8%, you're getting paid to borrow. It's literally free money. So, okay. And then there's definitely going to be some changes for next year. They are pushing people to get away from gas. So definitely look at that. I actually did all electric, I think, minus doing gas to the washer dryer. So definitely look at that. On the commercial construction side, we're seeing a big move toward that because they will penalize you in the future for polluting. I promise you. So just be aware of that. I mean, it's going to slowly happen. It's not going to happen overnight, but just double check into it. So again, that's going to be some changes coming next year. They're going to try and push people away from gas slowly but surely. Okay, so some of the financing methods for doing this. So obviously you can do cash, right? If you got the money sitting, which is the easiest thing. If you got a contractor and you got cash ready to go and he knows the payments are going to come easily, that's perfect, right? You could do a HELOC, pull some equity out of your home. Especially right now, I'd be thinking about doing a HELOC because, you know, a lot of you, if you got properties, your first mortgage is probably a lot cheaper interest rate than 5.8%, which is where mortgages are currently at. So, you know, go ahead and pull some money out with a second mortgage, which is a HELOC. That way, only a portion of the mortgage is at a higher rate. And then again, going back to this chart, right? Mortgage rates are very cyclical. They're all priced off of the 10-year. They will come back down, right? So we're kind of at this peak. This will eventually roll over, and you'll be able to refi your property at even lower than what we saw during COVID. So you're going to see some really great rates probably in like 2024. Okay, so 203K loan. This is kind of like an FHA rehab loan. Definitely a little bit harder and trickier, but can be done. So you can look at doing that. Short-term construction loans, it's kind of like a hard money loan. You are essentially borrowing money at a higher interest rate than most mortgage products or, you know, real estate-backed lending products. And then you are going to refi the entire property once you're done. So this would also be known as hard money. If you guys are investors or have heard about that, there's definitely hard money out there. One of probably the best things that I've come across as far as the ADUs is Umpqua Bank. So this is exactly how you spell their name. They're based out of Washington, but they have a location here in Newport Beach. And just so you guys know, I will be posting this on my YouTube. Okay, so I'll shoot a link out at the end. So, but Umpqua Bank has, bar none, one of the best things I've ever seen. Okay, so what they're going to do let's say for easy math, your existing property is worth $1 million. Okay. So at the $1 million, you say, okay, well, I want to build an ADU. I want to do a 700 square foot ADU. That's a 2-bed, 1-bath, blah, 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 whatever you're going to do. They're going to look at it. They're going to look at that plan set that you drew with your architect. That's all they need. They just need that little site plan. And they're going to say, okay, well, based on what we're seeing, the future value of this property on some of the comps that are out there that have ADUs, this is going to be a $1.4 million house. Sweet. So, and then they're going to lend to that new value, and they're going to give you an interest-only loan on the construction, which is awesome. So if you already have an existing mortgage, your price is that your monthly payment is going to go down because you went to interest only through the construction period, which is probably going to take about 4 to 6 months. So you're going to have a cheaper monthly payment for about 4 to 6 months, get the thing done, and then you refinance when you're done. You basically, the permanent financing kicks in when you're done. And they have all the different options, 30-year, 15, ARMs, whatever you want to do. Okay, whatever makes sense. And you basically just got that no money out of pocket as long as you're leaving 10% equity at the end of the day, which is awesome. So I've definitely looked into this. Fortunately now I have the cash to do it just out of my pocket. I'm going to refi the thing when I'm done anyway and get the money back. But if you wanted to, be creative, again, look at Umpqua. I've looked into it quite a bit. There's definitely some paperwork that comes along with it because, the bank wants to make sure that they're taking the risk out of the project from themselves. So definitely something really cool to look at. And Ron said, check out the Cal FHA ADU grant program, up to 40K grant. Yeah, so things are only going to get easier as far as the ADUs, right? So they're still kind of new, not so many people know about them. And the lending, the money markets will catch up and kind of, figure out ways to get these things done. So, which is really cool. There's going to be a lot more easy money for these things in the future. So kind of a rough cost. It's actually funny. So the contractor that I am teamed up with, I originally had this thing going in 2020 and decided once I kind of saw the weird wonky stuff, going on in the market, decided to just kind of put it on pause. So originally my build cost, I think, was like 120. And, reached out to him and said, hey, let's refresh this quote. I know it's, about 18 months down the line. And he goes, okay, well, I just got to warn you, it's a little more expensive. I go, okay, no, probably what, 25% more? And I was basically spot on. So that's what I see day to day in, what I do for commercial construction. As far as the building industry, things go up typically about 3 to 4% per year, which kind of follows inflation a little bit. But within the most recent couple of years, we've seen about a 25% increase. So this is kind of a rough rundown of what you can kind of look at. So for what I have showed you guys, the kind of 2-bed, 1-bath option, roughly 700 square feet, you're going to be looking at this type of cost here. So I've got some also further breakdowns where it's kind of a cost per square foot for mechanical, electrical, and plumbing, cost per square foot for architectural. I'll try to pull some of that up and send it out to you guys. But that's definitely some metrics that architects use to kind of price their projects. But other times, a lot of them are just going to be busy and they're going to, throw a little bit higher prices than what is, quote, typical because they can, right? Supply and demand. So, but anyway, plans for the project that I did are about $6,500. That was through my contractor. So that is, the architect, the structural engineer, all that good stuff. That comes with it. The main structure itself, as far as construction, you're about $155 a square foot. So that's for a single story structure. It would definitely go up a little bit with a 2-story structure. So, everything is definitely has a different impact. But that's your, traditional, wood frame, stucco exterior, shingle roof, you know, PEX plumbing project, and also like a 200 amp panel on it as well. So interior finishes, you can definitely, you know, go a little bit, you know, more as far as, you know, doing like marble countertops or marble tile. You know, I'm doing white shaker and quartz and, you know, LVP, right? So again, I'm going to live in it for a little bit, but after I move out, it's likely going to be an Airbnb. So because I'm pretty close to Disneyland and I'm going to take advantage of that. So utilities, so for a 4-inch sewer, you're looking at about 38 bucks a lineal foot, 1-inch gas, $32 a lineal foot. And of course, this is all going to vary on your lot and what you're looking at as far as your project. The water line, $38, 2-inch electrical feed, 50, and clean out. So you definitely want to have at least one clean out. A couple clean outs would be good. Just so if you ever have any problems with your sewer, any kind of backups, you know, with tenants, it will happen. I'm sure, you know, all the landlords out there have been through some kind of backup, whether it be hair or, you know, the worst ones where it's all the way at the main sewer line. Definitely having a clean out helps. Um, so anyway, so in a nutshell, that's kind of the ADUs and the process. I'm going to kind of go through some more of your guys' questions just because it's going to bring some more stuff up. Just for my YouTube name and link, just so you guys got it. It is my name, Tom Van Aken. Okay, so let's go back here. Okay, yeah, so Vadim, what's the max square foot for a junior ADU? That varies all by city. But typically, I think 500 square foot is kind of a max from what I remember. Seems to be a commonality among some of the cities. So, okay, so has anyone done a project under the new SB9 allowing up to 4 units on a single family zone? So, to Sarah's question, so Felix is the name of my contractor. Felix has done some projects with the 4 units. What they typically do is they'll do a detached or sometimes attached ADU, and they'll build a single 4-car garage. Okay. Get that project done. So now you have the 2 units, you have 2 garages, 2 cars to serve each unit. And then after the project is done, they go in and convert both those garages and make 4 units out of it. So you can't do it all in one shot. You kind of have to do it where you're closing it out with 2 permits. So that's just kind of how they make you do things. It's just a lot easier to convert garages, you know, as far as the city goes. You may be able to do it in one shot, but they're probably going to fight you quite a bit on it. So that's one of the easier ways to get it done. Restrictions in Anaheim. Airbnb is allowed in Anaheim. They just kind of make you pull a fee, get a short-term rental permit from what I can understand. So you can definitely do it. Okay, extend a prefab ADU. Is it possible to extend a prefab ADU and extend to include a bathroom and a kitchen? I don't believe the existing ADU is permitted. Well, the answer is that depends. That it all depends on what that structure is like, what it looks like. I would have to kind of see some pictures. I mean, anything's possible. It really just depends. So I would just, yeah, I'd have to know more information about it, Peggy, as far as the prefab ADU and the extension of the bathroom and the kitchen. But yeah, definitely look into it. Have a good contractor kind of advise you on that. Um, so anyway, so yeah, kind of short and sweet, guys, as far as the ADUs go. What I want to do once I'm getting pretty close to being done on my project, I'm going to do a little walkthrough and have you guys actually here at my project once it's all kind of framed up. We'll do a walkthrough, check it out, kind of fill you, you know, more in on my experience. And you can kind of see something in real life and get to watch, you know, get to walk through it. So that'll be pretty cool. And then if I end up doing that project in Redlands too, it's a bit of a haul, but I could also do a walk out there potentially. Um, so yeah, so it'd be pretty good. But at the end of the day, not enough people are doing these, right? Because you're making California real estate, which is expensive, cheap again by doing these. You are, again, $600 a square foot is not much for Orange County. There's areas that are like 800, 850, $1,000 a square foot. And when you're building for 225 or even 250, or if you're going, a little bit higher end on finishes and you're building at like $300 a square foot, and your value is, a lot higher as far as appraised value per square foot, it's a slam dunk. You're going to take risk out of that property for you once you go and refinance. If you did put money into the project as far as, fronting cash, and you refinance, you're going to be able to pull all that money back out. So, and then you have added equity at the end of the day. You have added cash flow because you have an extra unit. Whether you're going to put a long-term tenant or you're going to Airbnb it, whatever you're going to do, it's a total slam dunk. So it's really, yeah, it's really a no-brainer as far as the ADUs. And of course, if you're adding multiple units, you're only making it better. So yeah. So definitely, check it out. What's going on in your city? If you have existing properties, definitely look into it. But have kind of the mindset, like there's a lot of properties here in my neighborhood that have huge backyards. And I've kind of, try to be, aware of what's going on in my neighborhood as far as my neighbors and when they might, potentially sell. Because, these plans that I have, I can just copy paste, onto these lots. So, which is pretty cool. But yeah, definitely for anyone who's looking into, wants to get into, flipping or something, if you're doing one of your first ones and you have, a detached garage, that's going to help you force the value up and, push value on that property, to, because usually if you're kind of getting your feet wet on flips, you're probably not getting deals with the best margin just because you haven't got a big deal funnel, big deal pipeline. So definitely look into doing, something like that and something like this. Yeah, cool. Thanks, Ron. I'll be at your next one, man. So anyway, guys, real kind of quick and sweet on ADUs. Next one, we're going to talk about crypto, and I'm going to try and do that in person. So kind of following our model of real estate, stocks, and crypto. I definitely encourage you guys to check it out. So again, these are software companies, right? These are teams, developers, programmers, and they are under the umbrella of a company. So it is just software companies, tech companies, and it's kind of stocks kind of rewrapped a little bit differently. Some are a little different, obviously. But yeah, we'll do the next one on crypto. So anyway, cool. Well, thanks, guys. I'm going to go ahead and post this to my YouTube. If you want any more, if you want to go back and look at any more stuff, I'll also kind of post some of the resources that I have as far as designer fees, how they kind of calculate their fees. That way you can kind of know, where things should be. You can at least throw it at them and say, hey, no, I think I should pay this much per square foot based on my project, right? So that definitely helps. So I'll go ahead and post some of that stuff when I send it out. But yeah, thanks for jumping on, guys. One more thing that I want to do. If you guys do, this definitely helps me as far as the fees for Meetup, which aren't a lot, but there are fees to do this. We've got my link tree. So if you want to get some free stocks on Robinhood, Webull, free crypto through BlockFi or crypto.com, I would definitely recommend getting a BlockFi credit card if you want to get exposure to crypto. So I've actually got two of them. They're crypto rewards credit cards. So you're basically going to accumulate Bitcoin or Ethereum or Chainlink or whichever one you think is a good one with every purchase you make, which is really, really cool. So I really like BlockFi for that. So if you use my link via my link tree, which is also on my YouTube, you're going to get $40 worth of Bitcoin for free. And it's a really great way, again, to get exposure to cryptocurrency if you are bullish on it, and kind of accumulate without really buying it or even knowing it. So which is pretty cool. So anyway, cool. Well, thanks, guys. I'm going to go ahead and wrap it up. Thanks for jumping on. We'll try to do the next one in person when we do it in October. So Be nice to meet all you guys. See you guys.